Morning, everyone. Welcome back to the webinar. Good to see you again. Hope you had a good month. We've got an exciting session today. I'm going to be joined in a bit of a dual act with Johann Els. I'm on Johann's laptop, by the way, with some technical issues. So it is me, Hywel George, on Johann's laptop. Johann Els is our Chief Economist and expert on South Africa and global matters. And I'm going to be chatting to him about South Africa and what on earth is going on and how we might resolve things. But that'll come after my market update and economic update. So Johann will join me physically in front of his laptop. It's going to be exciting. So we're going to be about 15 minutes on the markets, and then we're going to be about 20 minutes with Johann to try and solve all of South Africa's problems. Cool. So let's get into the slides, see what's going on. So we've had this. So if you kind of navigate yourself on this slide, this is basically 2022, where equity markets had a very tough time, down about 20% last year. And you can see within 2022, we had what we call bear market rallies. So kind of a short-term peak in March 2022 and a short-term peak in August 2022, but they kept going down after that. So a little rally down, always peaking at kind of lower levels. And we've had another, what I would call a bear market rally this year, into this year. And peaking kind of now. The question is it a bear market rally and it'll go down again, or is it a start of another bull market? So let's see what the insiders are thinking. So by insiders, we mean management teams. So board members, they have to disclose their purchases and sales of shares. So it's called insider trading. What are the insiders really thinking, and how are they trading? Well, let's have a look. You can see that insiders, those within companies who really know what's going on the ground, are selling. And you can see they're selling it at quite high levels right now. And if you look at this chart in terms of the kind of dates on it, you go back to previous peaks in selling. They were around about August and around about March. And those are the two previous peaks I talked about through 2020 to 2022. So just keep in your mind these insider sales, March 2022, August 22 on this chart, and now. And let's go back to this chart. And you can see spike in insider selling at the peak of the market short term, another spike in insider selling, and now today we've got a spike in insider selling, which suggests to me that the market could go down a little bit from here, and we're in a bear market rally. But why are the insiders selling? They can see a recession coming. This is a chart which shows you the probability of a US recession based on yield curve movements, etc., what the bond market is telling you. I won't bore you with the technicalities of that, but the gray areas are the actual recessions, and this is the probability of a recession. So you can see as the probability rises, we generally get into a recession. So a recession is likely in the nearish term, I would say. We've been talking about it for a little while. And in a recession, what tends to happen is your profits tend to fall. So insiders in boardrooms are saying our profits are going to go down. This just shows you earnings estimates versus the ISM manufacturing index. The ISM is a survey of manufacturers, and below 50 suggests you're going into recession. And that tends to track profits growth. So profits, expectations and profits growth is likely to go down, which is not what markets generally like, particularly when profits are well above trend. So this shows you, what's this, the last 12 years? This is earnings, not growth, but the trend in earnings, the actual level of earnings in the S&P 500 going back 12 years. And you can see the kind of COVID 2020 thing coming down, and then a huge recovery, big recovery in earnings. So we're now well above what we'd call a trend line, a normalized line through time. So you can see that earnings look like they should come down about 20%. Which is behind well, certainly my forecast of the S&P 500 likely falling this year from this current bear market rally. And in addition to that, we've got inflation. Again, we've been talking about this for some time. These are the kind of core measures of inflation, which the Fed look at, the Federal Reserve look at. And you can see how they've gone up from pretty much zero, kind of 1%. And of course, recently they've gone up to 5 or 6%. Headline inflation was kind of 8 to 10%. Still kind of is up there in some parts of the world. I mean, German inflation is still 9.3% and actually going up again. So core inflation is proving sticky. It's not really coming down as you would expect. And Jay Powell, the chairman of the Fed, said just overnight, the night before last, this is a problem. And he may have to raise rates even further, even quicker. Again, something we've been flagging for a little while. Because behind this high inflation, sticky inflation, is wages. And this is a wage tracker for the US, UK, and Eurozone, and you can see it's around about 5 or 6%. So if wages get stuck at 5 or 6%, then inflation is going to get stuck there, and rates will have to go much higher. And in addition to that, we've got a strange situation, because we've kind of got a recession coming, but we've also got pockets of growth and strength in the economy. So the consumer is still quite strong in the States. So retail sales in January, for example, this shows them, recovery in January. See, the consumer still looks quite strong, and the consumer is still spending on their credit cards. And we had some very strong jobs numbers out of the States just in January as well. So the economy still continues to create jobs. You can't really get inflation down until the jobs market starts to shed jobs. That's not happening yet. So you've still got quite a strong consumer, strangely. And even parts of manufacturing, this is the manufacturing January, again, quite strong, or certainly robust. And so you've got this strange thing where you can kind of see a recession coming, but in the meantime, you've still got quite strong pockets within the economy, which means the Fed will have to do even more. And I found this quite interesting. Let me navigate this for you. Okay, so this tells the story that generally, when inflation goes up, and it's been a long time since we've had an inflation problem, 40 years, when inflation goes up and gets kind of stuck, you have to raise rates above the level of inflation. At the moment, rates are, what are they in the States, 4.5%? And inflation, that's on here, inflation is 7%. So that suggests to me that rates have to go up to at least 7% in the United States. That's nowhere near what the market's expecting. Market's saying kind of 5, maybe now 5.5, certainly not 7. So going back to 1974, you can see the dark blue is the Fed funds rate, and the light blue is CPI, which is inflation. So you can see each time inflation's gone up, you've had to raise rates higher than the level of inflation. For example, 1981, the second group of bar charts there, Fed funds rate 20%. That was the Volcker, the final nail in the coffin of inflation for the last 40 years until now, against inflation of 10. So you can see now we've got 4.5 versus 7. That's a problem. Rates are going to go higher. And at the same time, you're getting this tightening of credit. So banks are tightening credit conditions. This shows you how tight credit conditions are, because as you raise interest rates, then banks tighten the credit to their end customers. It becomes more expensive to borrow money. And that tightening of credit, you can see that kind of peaked in 2000, just before recession, peaked in 2008, GFC, just before recession, went up in 2020, went down and come back up again now, just before what is likely to be a recession. And you can see those peaks as well in the equity market. So just think back to that previous chart. I'll show it to you. 2000, 2008. Look at this chart. 2000, 2008, credit contraction, market goes down. This is the S&P 500. 2008, credit contraction, market goes down. For the last 12 years, since the global financial crisis, we've had an unrelenting credit boom. I've been talking about money supply hitting the economy, huge amounts of money being printed, quantitative easing. That's what a credit boom looks like. And now, go back to this chart, credit is being tightened. What's likely to happen, credit boom, now we're getting credit contraction, not good for the market. I'm sounding very bearish, I'm sorry about this, but I'm concerned about markets. So this is just around the point home, your cyclical indicator, we're kind of entering a downturn. And it's at a time when I hit say, but the market's still a little bit expensive. This shows you a price to sales valuation of the S&P 500. Okay, and this shows you back to 1991, kind of splitting it up into kind of decade type things, or 5-year cycles, I think this is. And you can see price to sales, 2000 peak, bottom left there was 2.3, 2007, 1.63, etc. Currently, 2.43 still. Previous peak, 3.2. So we're still at elevated levels for the market. And again, that's a bit of a problem. And maybe finally, this is when you get higher inflation, you generally get lower equity market values because rates are generally higher. So your discount rate is higher, the value of your future profits is lower. So this shows you by inflation tranche in the x-axis along the bottom, the higher inflation at that time, generally the lower the valuation of the equity market, which is the 11.6 times, 11.6 times, 8.5 times, 8 times towards the right-hand side. So the y-axis is the valuation of the S&P 500. So higher inflation, lower equity market values, and the equity market remains pretty high in terms of its valuation. So I think this is a bear market rally. I think it's rolling over, and I think we're going to have a tough time for a while. Let me spend 5 minutes with a geopolitical update for you, and then I'm going to bring Johann in. I'm just going to wave at him. He's sitting outside the door there. Okay, this is a quick update. It'll take 5 minutes. So the Ukraine war, it's shifted geopolitical power, really it's accelerated a shift from west to east. We've talked about that in the past. What's happening now is the war in Ukraine is proving really quite expensive for the United States. So we're seeing headlines in the New York Times, for example, America is in over its head. Very expensive war. And on the right-hand side, is Putin actually winning? Maybe not the war, but the world order is shifting. This is the global south story, from west to east and what's now called the global south. So let's investigate those just quickly. Cost of the war. I found this chart quite interesting. US to Ukraine military aid at the bottom there in the blue chart. That's percentage of GDP. That's $100 billion. Actually, just over. $100 billion it's cost the US so far. And they're starting to say, you know what? That's quite a lot. Because we spent that amount in Afghanistan in 10 years. And we're spending that already in Ukraine. It's a proxy war, but we're still spending the money. And it's going to be catching up with the Iraq war soon. So it's a lot. So the US political parties are pushing back. I mean, the Democrats in particular are pushing back on this particular venture. So you could see cracks in the Western alliance, which gives power to Putin. And the war, of course, is a stalemate. This shows you the progress of Russian occupation in Ukraine. From March 2022, in the first invasion, you can see Kyiv there at the top. They kind of made it to Kyiv and then had to go back again. To the bottom right today, February 2023. And you can see it's a complete stalemate. So it's static on the ground. But what that means is that Putin is winning elsewhere in terms of his influence and his influence within the global south. And this is coming through in things like United Nations votes. So this is the latest UN resolution to condemn the war in Ukraine. And there were, at the bottom there, 141 countries in favor, 7 against, in red there. You can see, where are we? Democratic Republic of Korea, Belarus, Eritrea, Nicaragua, Syria, and then 32 abstained, including South Africa. And those 32 are a lot of African countries. And India, I think India abstained as well. Let me just check that I can find an Yes, India abstained, and Iran. So India, China abstained, Iran, Africa, the Middle East. That's the global south, and they're abstaining on that war. So they're siding, de facto siding with Russia now. That's how the world order is shifting. So the Ukraine war is a big deal, but it's a particularly big deal in the West. But for the East, they're doing, frankly, other stuff. And they're building their coalitions in what I call the East and is now called the Global South. We talked about the links between China and the Middle East, the Shanghai Cooperation Council, the Silk Road, Belt and Road Initiative, etc., that $8 trillion initiative linking Middle East through Eurasia, Russia, and into China and India. These are China's exports to the Global South. And since 2020, you can see they've doubled. Look at that thing. Chinese exports have doubled in the last 3 years to the Global South. And of course, Russian oil and gas is now going into China and into India and into the Middle East and into Eurasia. So that Global South block is developing incredibly quickly. And guess where all the resources are? The resources are in the Global South. I mean, this is gas reserve. I could show you a similar one for oil, which would be the Middle East, Russia, Venezuela. But for gas, Russia and Iran and Qatar and Turkmenistan would completely dominate. And you know what? Even in a green energy future, gas is going to be pretty important to us. So control of resources is going to be so fundamentally important to the world for the next 10 years. And who owns it and who processes it? The Global South. Russia and Iran are integrating their banking systems in order to get around being banned from SWIFT, which is the dollar-based Western system. This is happening all over the place. So India into the Middle East, Russia, Iran into China. All their banking systems are shifting from the dollar into their own network of currencies based on their commodity holdings. In fact, in the same way the dollar is to be linked to gold, the Global South currencies will be linked to their commodity holdings. And I'll finish on this. So back to Russia as a key player in this. This is why Putin actually feels emboldened by what's going on, because his power base is increasing. This is not the narrative we're getting in the Western papers. For good or for bad, I'm not a Putin fan, but his power base is increasing. And he's been very active here in Africa. This shows you where his kind of, what do you call them, military cronies, I guess, the secret police, whatever you call them, the Wagner group, which are a bunch of mercenaries who are very active across northern sub-Saharan Africa, I guess you'd call it. And they kind of, the influence here is becoming very important, particularly in the old French states. So supplanting the French, and the Russians are coming in, along with the Chinese. We know the Chinese are in Africa already. But look at this. So this is the president of the Central African Republic. In the middle there, in blue, and all those troops are from the Wagner group, Russian troops, protecting the president of the CAR at a rally. These are Russian troops on the ground, protecting the president of a state of Africa. And children in these countries are being taught Russian. These are children who are holding up blackboards with Russian words on them. They're being taught basic Russian across large swathes of Africa. It's quite extraordinary. And Russia's building a naval base. Very important part of the world, Eastern Africa, in Sudan. So it's building this military presence. So Ukraine's a horrible war, but a little bit, not a sideshow, it's too glib to say. But there's other stuff going on. And Russia's influence is increasing, not decreasing. And by the way, it's being shown in the currency. This is the Russian ruble. So I can navigate this one. So invasion of Ukraine, the ruble collapses against the dollar. This is the Russian ruble. It collapses quite briefly at the onset of the war and then recovers very quickly. So the ruble is now higher as the currency of Russia than it was before the war. That tells me its influence is greater internationally than before the war. I'll finish on this and I'll get Johann in here. China and Russia. I mean, the kind of call it a bromance. Again, it's a little bit glib. But, you know, China and Russia is the axis, along with India and now Saudi and the Middle East, in terms of this new global south. And power is shifting as we sit here from the West and the US into the global south. So keep an eye on that. Johann is here. So I'm going to get rid of this thing. Good to chat about that. We're going to try and do look at this. We're going to try and do a double act. Hi, Johann.
Hello, Mel.
You all right?
Yeah, good. Yourself?
We're kind of hoping you'll be able to see us both, because we've got this virtual background. We kind of go in and out and that kind of thing. So hopefully we're not too ghost-like as we're chatting. So we'll try and keep close to the camera. Johann, you're a bit ghost-like, but a bit closer to me. You're the main actor.
It's a bit too close.
We're uncomfortable post-COVID here. So Johann, I've introduced you already as our chief economist and an expert in all things South Africa as well as global. So listen, as an outsider coming in, I've been here for 10 years actually, so I should be an insider.
Yeah, you're certainly.
But you know, if I put my outsider's hat on and I look at headlines, you know, offshore, South Africa seems to lurch from crisis to crisis. You know, since I've been here at least, it's just the way we are. And you know, the outsiders look in and say, "My goodness, what is going on in that country?" You know, it's just like, why can't we kind of get our act together? It's just so frustrating because there's so much talent here, there's so much potential, and yet we always seem to get in each other's way. So my opening question to you is, Why is that? Not kind of short-term stuff, but long-term. Why does our country do this the whole time?
Yeah, a big part of that is politics. So in the 60s, we had excellent growth, 5, 6, 7% per year for more than a decade. Then we had a growth driver, the mining sector, for instance, development of the Free State goldfields, etc. And then, of course, apartheid came, sanctions came. We never got back to that type of growth rate. Structural issues like we have now with electricity, which I'm sure you're going to talk about. All these kind of issues, infrastructure problems, but politics have been a big issue from the apartheid years. And then in the change over to the new South Africa, boom in confidence, that helped significantly. So in the early 2000s, we actually got to 5% plus economic growth rate on a fairly sustainable basis. And then politics hit again. After the global financial crisis, we never got back to that because of the Zuma years. So we've got these cycles. But structural issues like a regulated labor market, that's forever been behind the lack of getting growth going. And we haven't got that growth driver that we used to have in the mining industry. And then politics again. From time to time, you get these policies. They'll talk for a long time around nationalization of the mines. That hit us significantly back then. We didn't participate in the global commodity price cycle. So you're right, we lurched from these cycles, starting to look better, worsening again. I do think, though, that we're on a better trajectory.
We're going to get there. Let's not get better yet.
But we are.
I hope so. I hope you're right. And let's get there. But that was kind of those are the kind of glory early days. And as you say, we had the Zuma years. How much damage did the Zuma years do? And how hard is it? Because you look at what Cyril's doing now, our president, and it seems very slow. But is the quagmire so deep that it's necessarily slow, and it's kind of still going on? Corruption seems to still be happening. How bad was Zuma? Yeah.
I suspect much worse than what we anticipated, or what we saw during the years itself, or even just when Cyril Ramaphosa started as president. Now looking back, that was almost a permanent hit to confidence. And there's a huge link between confidence and growth. And that hit to confidence is still lasting. Then people say Cyril hasn't been doing anything. But I think he's already surprised on the upside. If you think back to the unrests we had
in July. You think he's surprised on the upside?
Yes, wow. Absolutely.
Okay.
I know at the moment it seems like a confidence crisis, but if you think about economic policy, back in July 21 when we had the unrests, and then later in 21 when the ANC did pretty bad in the local government elections. So instead of shifting policy from the center to the left, to the populist side, as many expected the ANC government to do, they shifted policy to the right.
True. And
that is quite significant. This co-opting, this invitation to the private sector to come and participate. I think that was far stronger than expected. And while that might seem, given our problems at the moment, given the confidence crisis at the moment, it might seem like it's not that big, it's not that important, but that's playing out as we look into this electricity crisis. It's almost hugely beneficial to the private sector, this privatization by stealth into state enterprise functions.
We need to talk about the election coming up, 2024.
Next year.
And what's going to happen. But we must talk about Eskom, because everyone wants to know about Eskom. Because we're all suffering from load shedding, and many people are suffering very, very, very badly from load shedding. It's an absolute tragedy, in my view. And it's a disservice to our population. It makes my heart break. But is it going to get worse from here, or is it going to get better? And what's it going to be like in a year's time? Give us some numbers, some hope if there is.
So, yeah, some of these things are so frustrating because there's actually lots of electricity coming online pretty soon. Yeah. Extra imports. We're busy signing the final deals. Extra buying of electricity from companies that's generating their own and they've got excess available. So they use some for their own use and excess available. Extra power from the renewable energy projects. For instance, some of those wind farms or solar farms signed contracts for 100 megawatts, but they've got availability to produce 150. Now Eskom's going to buy that extra. what is so hugely frustrating, all these extra that they could have bought a year ago, 6 months ago, 5 months ago, and they haven't.
Why is it taking so long?
The bureaucratic processes in this country is
You knew you said corruption,
significant.
didn't you?
Red tape. Red tape
Okay,
is
we'll call it red
significant.
tape.
And hopefully this state of disaster will sort some of that out in terms of getting the contract signed quicker, etc. For instance, Kusile, those 3 units heavily impacted by that chimney that collapsed, but now they can't fix that quickly because of environmental issues, can't pump into the air all the sulfur, etc. If we can sort of ease up the environmental processes quicker than the normal 12 to 18 months that it takes. So your question was down the line, I think it's going to start improve pretty rapidly. Have you got solar on your roof?
Yeah.
You're part of the solution.
Thank you.
You're part of the privatization. All the audience members who've got solar on their roofs are now doing it because of the tax benefit. That's part of the solution. That's part of this privatization. Eskom as a company is going to fail, but we're doing it and we're sorting it out. So a few months from now, a year from now, 2 years from now, the risk of load shedding will be significantly less, not zero, but less than what it is now.
Okay. Well, that's
But a
encouraging.
key point here is that now, relative to the year 2000, already the economy is using 25% less electricity to produce the same GDP. So we've become more effective. To some extent, maybe also the economy shifted more to services and less electricity intensive processes, but there's also much more private electricity. So it's pretty bad, but the confidence impact for me is worse than the actual economic impact in terms of production.
So give us some number. I've got in my head, in broad terms, we're a 40 gigawatt economy, and we're running at 20 gigawatts, given load shedding. So we're at half what we should be. And we've got coming on, if I'm right, we've got about 9 gigawatts coming on in the next year, and about 20 gigawatts after that. So we're going to be back to where we
total of
should.
20 already applying for grid access from Eskom.
Okay.
Grid is also a problem, so we need massive infrastructure spending, but more local production. In other words, Old Mutual selling its excess capacity from the solar panels on the garage into the Cape Town grid. So the local grids will try to sort out some of that national grid issue.
Okay.
So 1 gigawatt from extra imports, 1.7 gigawatt buying from manufacturing companies who's got excess power available. Just as a brief example, all the generator imports from the third quarter of 2021 to now, just 18 months, 2.2 gigawatt capacity. That's 2 stages of load shedding. Now, on the one hand, tells you how bad Eskom is, that with that capacity available. But all this, and that's ongoing. So part of the economic cycle, of course, as well, for me, is that massive fixed investment in the energy sector. And the private sector opportunities there. That's hugely exciting.
I mean, one of your headlines was the electricity liberalization, whatever it's called, last year, was the biggest economic and political announcement since 1994. Just explain why.
In fact, in my mind, it's the biggest ever economic policy reform ever in South Africa. Because we've never done something like that. We haven't done any privatization. Incidentally, privatization would be one of the key things we need to do to get this economy on a more permanent, sustainable growth path. We're never going to get that under this government. But there's such a strong privatization by stealth ongoing. And that energy reform is a huge part of that. If you're a conspiracy theorist, you might almost say Cyril is engineering this to get the right kind of economic policies through.
It does kind of sound like Cyril does a lot in the background, which is fine.
It is fine.
So the impression, you're getting ghost-like, by the way, come closer.
No.
Come closer to me. So the impression of what I'm calling Cyril Ramaphosa is doing is maybe not doing him justice, given what he's doing in the background. So that's the way he operates. That's kind of a big message, huh?
Absolutely.
Yeah?
Absolutely.
Okay. So let's roll that forward to the elections. What's going to be the percentage split when all's said and done in 2024? Who's going to win?
So we are moving in the right direction with economic policies, etc. But next year's election, probably lots of volatility as we go forward towards that. And I think that's the biggest risk, is a coalition government on a national level. Local government coalitions, provincial government coalitions haven't worked. Imagine that ANC gets close to 40% of the vote. Then they have to go into a coalition with one of the big opposition parties, EFF or DA. Imagine the policy infighting there. So that's a huge risk for the future.
Okay, that
but
sounds good.
If they get close to 50, 46, 47, 48, 49, coalition with a small party, give them Minister of Tourism or something, no big impact in terms of policy. So there's a huge potential risk out there. That's why I was so disappointed with cabinet. That was a potential missed opportunity. That's not the way you win an election. If even my Uber drivers are hugely critical of that, then you know.
Oh, really?
Yeah.
Must have been bad. Okay.
So big risk around the elections next year.
So low 40s, bad outcome, because we got a major party in this coalition. There's kind of maybe a disaster. High 40s, small party, we can muddle through.
We can
muddle through South Africa thing. Okay. And Cyril is strong enough to get into the election and kind of get to the high 40s, do you think, or not?
He's personally the most popular politician in South Africa. So you can probably pull some people with him. I think lots of people realize that, the DA, the EFF, they're not going to win an election, so we still sit with the ANC. We need a strong ANC. I just don't know if Cyril's slow processes around cabinet reform, etc., if that's going to pull him to 50. But probably a high 40s, that's possible. The one proviso would be sort out load shedding now.
Yes.
And he knows that government can't do it. That's why they've got the private sector in. And that is hugely positive, despite this confidence crisis we have at the moment.
Okay. And talking about confidence crisis, my confidence in the rand has gone down, I'll confess. And the rand's been very weak. It's 18.5 today, from like 16.5, 17, something like that. So that's not great. Part of it, the dollar's been very strong. Get that. So most currencies have been weak against the dollar, so it shouldn't be too unfair. However, give us your view on the rand, like today. You a buyer?
So I think the rand is too weak, fundamentally. It's oversold. I think the rand, I would argue that the bulk of the rand's weakness is due to international factors, specifically US rates, dollar. That's the bulk. I do think, though, that despite the Fed might have to hike more than what we thought in the very short term, once markets see through that and once markets realize, probably by May, June, that US inflation is actually falling, the Fed is actually at the end or very close to the end of the cycle. The dollar's already off the peaks. The dollar is going to drift further. I think, given my view that the bulk of the rand impact is global factors, the rand is going to strengthen towards the end of this year.
Okay.
But then for the medium term, we probably need to sort out all the growth and the other stuff. And then rand can potentially stabilize quite a bit more relative to recent history. Big part of that is the fiscal part that has improved significantly.
We should note that. So the fiscal situation, the debt load we're carrying as a nation, is way better than it was.
Way better.
Like 5 years ago.
One important fact there, well, there's two positive factors within the budget that nobody really seemed to focus on. The first thing is that for the first time in 15 years, we are no longer paying interest on government debt. Sorry, wrong.
That would have been nice.
You're no longer borrowing to pay the interest on debt.
Okay.
Imagine in your personal finances, you were to borrow to pay the interest on your debt. So for the first time in 15 years, we've got a primary surplus. We're no longer borrowing to pay the interest on debt.
So we're out of what I would call a debt trap.
We're out of the debt trap. And the assumptions around the budget going forward is, in my mind, fairly credible. So that surplus, that primary surplus, is just going to increase over time.
Okay.
If we come back briefly to the second positive point in the budget, which adds to the privatization process, that Treasury is appointing this team of international experts to go and inspect the power stations. once they say, okay, this one we can actually fix, tick it off, that's going to be concession to the private sector. No longer run by Eskom, concession to the private sector.
A power station.
A power station.
Owned by Eskom is going to be given to the private sector to run. I actually completely
Do you think that'll be more effective than
that sounds
Eskom?
better?
I think so as well. So the private sector wouldn't have to pay to buy the power station. They're just going to run some kind of contract.
Okay.
And efficiency clauses built into that.
Okay.
And I didn't see any pushback from Kusato or anybody else in government regarding that. That is hugely important. This privatization by stealth is gaining momentum as we sit here.
Yeah. Okay. That's good. So we're not going to be naive. So, things may not pan out well, and we're in a tough situation. However, if the balance of probabilities in your mind, the electricity situation improves, mostly because of private work. Cyril is doing more in the background in terms of solving our issues through the private sector, if I can put it that way, and kind of getting other stuff sorted out. And hopefully we get a decent election result, or decent-ish. So again, we can do the old South African muddle through thing. So in 2 years' time, what could growth be in South Africa? Can we ever get back to anything decent? Because it seems like it's 2% forever, and it's just killing me.
So, given our structural issues and lack of a growth driver, etc., it's probably unlikely that we'll ever get to a sustained 5 or 6% economic growth.
Okay.
But what is in the pipeline and the momentum behind privatization, that can get us to 2.5 in the medium term. Now, that's not great.
That's not great.
But it's far better than the one we had on average in the years to 2019, the 5 years to 2019. So if I ignore COVID interrupted years, we towards a 2.5, and 2.5 will start to make big inroads into lack of confidence, into the unemployment and social issues in the country.
Would unemployment come down if we get to
2.5%? Unemployment rate, that's something else, but underlying employment will keep on picking up. Positive employment growth. Unemployment rate, unfortunately, will stay high because the disillusioned job seekers comes back into the labor market. Only then gets counted as unemployed in the numbers. But underlying that, positive employment growth. And that will start to help. So confidence building, 2.5%, not great, but 2.5% is much better than 1.
Yeah.
It's more than double 1.
But it's better than 1.
It'll make it easier to get the fiscal position more firmly under control. Ratings agencies will start to like that as well. So this ongoing, even if it's slow, but ongoing move in the right direction.
I forgot to cover grey listing. So we've been grey listed. Didn't sound great to me. Is it a major thing in reality, or do we just fill in more forms?
Well, it's certainly not those doom and gloom scenarios we saw last year when this was on the cards. And people said, Rand is going to collapse, interest rates shooting up, economy collapse. It's not that.
Not that.
It's heightened scrutiny. It's better due diligence. It's perhaps a bit higher transaction costs. But the Financial Action Task Force actually said the Reserve Bank's oversight is fantastic. The financial sector in South Africa is great. The one reason that they gave why they actually went ahead with grey listing, or heightened scrutiny, as they call it, is the fact that legislation was finalized only in December last year. They haven't had time to see how this legislation is implemented. So they want to see the implementation of that legislation. So I actually agree with the Minister of Finance that it could potentially be a short-term period, like a year to 18 months, 2 years.
That'd be better than I thought. I had kind of 2 to 3 years in my head.
I think it could be short.
Okay. This task force is based in France, I'm told, not America. So thank you to the French for that. That was great of you. Okay, cool. I think we're okay. Have I missed anything? Do you want to say anything else?
I think we all know, it's an educated audience, that we don't invest for a day or a month or a year. We need to have a slightly longer term outlook in terms of investments. And if you do that, then you see this underlying improvement. As I say, even if it's slow, even if we're not getting to 5, 6 on a sustained basis, it is an improvement. And it's for the private sector hugely exciting. First, initially on the energy side, but that will grow into other areas as well.
I like that. Okay, that's good. To end on an optimistic note, I like that. And just to thank you, man. That's
Thank you
great.
very much.
Nice to sit so close to you. That was fun.
Wasn't too bad.
I'm not doing it again now. That was great. So, and the other, my ad would be kind of global South thing. You know, South Africa's made its position very clear. You know, we are aligning with the global South, who are frankly going to be the winners. So Russia, China, India, Middle East, our new best friends. So from a pragmatic point of view, it's actually a good idea. As China recovers, then resource demand will also recover, and that's good for our mining sector. So that's also a little bit of a tailwind. So let's try and be patient, and this time next year, hopefully we'll get a better narrative out of our beloved country. Thank you very much for your attention. Always lovely to see you, and see you next time.